Okay, we're going to give it a moment to see how many people come on. I'm actually typing Sarah Knudsen real quick. Okay, my name is Andre Hargrave, and I'm with the Denver Minority Center here in Colorado, Tech Center actually. We're funded by the Minority Business Development Agency. And welcome to today's class on bonding. We have Alan Green from Green and Associates, who's an expert on bonding. And yep, we'll go from there. Alan, I'm gonna turn it over to you. I got a couple of questions I got to answer here. So, Alan, please.
Very good. Again, my name is Alan Green, and my company is Green and Associates LLC. I been affiliated or doing bonding since 2011. It has been an interesting journey. Every day is a new journey. Every day is interesting because of the questions that are asked and the companies that show up and those that are just interested in growing their businesses. I'll give you a good example. Yesterday, the template we're talking about today is now that you've filled out all the paperwork, you've gone through underwriting, and now they've given you a capacity to bond, and you had your aggregate. What do you do with it now? What do you do with it? And that is an interesting question. So you want to grow your company. I'll say that again. You want to grow your company. And one of the things to grow your company, we always talk about financing, but what goes along with financing is also bonding. And you can use bonding in many different ways. So when you start looking at, again, projects, RFPs, you need to look at, again, will this particular contract that you're going after with this RFP be suitable for your company? I used to tell people quite often every contract is not a good contract. If it doesn't meet the needs that you can supply and do what you need to do to make sure that you can fulfill the contract. And so bonding goes along with that because bonding is the guarantee that you're going to fulfill that contract. So when we talk about bonding and you look at the RFP, make sure you read through the entire RFP. There's a section in there that says surety. When you see that section, I always tell people you need to read it thoroughly because it lets you know where you are with your bonding and the capacity that you can handle. When you start looking at that also section right there, I always tell people look at because what I deal with is corporate sureties and those corporate sureties are insurance companies, but I also deal with individual sureties companies, and those are guarantees right there. And so I tell people that when you're first getting started, you may not qualify for corporate surety. A lot of small businesses don't. And those insurance companies, again, they use that fine line because they're looking at, again, we talked about that yesterday, your assets. So you may or may not qualify for corporate surety, which is the insurance company. So we may talk about again using an individual surety, but you have to read that RFP and look in there. And if you're working with me, I'm going to ask you again, have you read it? Do you know exactly, can we use an surety or do we need a corporate surety? If it says in there too that information AM Best company or T rated, those are federal information or contracts that you're going after. And usually, when we're talking about A rated, the T, there's of course, rating agency that's out there that rates insurance companies and their bonds. And if it's on the list, they call it a T rated list. You won't find an individual surety on that A rated or T listed information. But the Defense Department, the Corps of Engineers, and many other U.S. departments, governmental departments use, again, individual sureties because the federal regs, what Congress put in place was 28.2. And basically, that information was allowing minorities to come to the table and bid on contracts. For years, a lot of minorities couldn't qualify because they couldn't get bonding. So, what do? Well, Congress decided that we're going to open up that door just a little bit more, and we're going to let individual sureties also be used. Because again, that is the backing of when we're talking about collateral right there, an individual surety. And Congress said, if you have a qualified individual surety, it can be used. But it is at the discretion of all the agencies, from the Defense Department to the Corps of Engineers and the others that are out there. So these are the kind of things that I always tell any client that I'm working with. Let's go through and see where you are. Let's look at the history of your company. Let's look at, again, how we can grow your company using bonding. So one of the things that I also find very interesting too is that you may win a contract and then in the regs, it says that you could use individual sureties or corporate sureties, but it also, again, I mentioned it a couple of times, is at the discretion of those departments. Let's talk about again, how do you grow your company? You may want to start out in the private sector and then move over to the governmental sector. And then you have to, again, know your company, know how you want to grow it, and at what pace you want to grow it. One of the things I tell, of course, many individuals, just like your lawyer and your accountant, you should be working with your bonding agent because your bonding agent, at many different times, you may have to call your bonding agent and say, I need a bond. And then that bond, again, has to be produced and then make sure that you get the bid bond information. But some of you all, you may not have bid on anything yet. So let's talk about bid bonds. When you do a bid bond, that's saying that that 5% collateral that you would have to put up, the insurance company will put the 5% up with the bid bond. And so this is how you can use a bid bond and use, matter of fact, as I call it, other people's money. And you don't have to put the 5% up. You can use the bid bonds to do that. And so you can bid on projects. Make sure you turn in your bid bond information and make sure that you get the information back. I always tell people, get it back 48 hours before you're going to bid on a project. That way you can read over, I don't care what forms they send you, especially in the bid bond information, because there may be a mistake or something that's in there. You catch it, and that gives you enough time to make sure that you have the information that you want to turn in. That's how you, again, grow your company. When you're also looking at, again, and you may have been established and you've been around for a while, like I'll give you a good example. Yesterday, a young lady sent me her information. She wants to grow. She has a capacity of $10 million. And I was looking at that and I read her letter. She has A rated, T rated uh, bond, and she's looked like she's been doing very well. She has a development company. And so the questions I was asking her was, okay, you have a $10 million capacity. She said, well, Mr. Green, what I would like to do is I would like to do bigger projects. I would like to do $20 million. I would like to do $30 million in development projects. I would like to do projects maybe in other states. So we were having that discussion, talking about now, how do you use your assets? How do you use your bonding? How do you grow your company from that, again, $10 million model, which is bigger than what she has right now? So we were talking about how do you grow your company? But then there's many different aspects again from starting out, which we talked about yesterday, to being an established company, to making sure that you can go from a 10 million to a 15 or 20 million dollars. That's so important. One of the things that you have to understand too, today's what I would like to talk about again, if we could move the slide again, is how do you understand what a surety bond is? Green and Associates, we concentrate on surety bonds. We also help with financing. I have about $2.5 billion that I get a chance to work with through various individual hedge funds and private investors, and also with banks. We do credit enhancement because what we found is some people don't have good credit. And so you may need to make sure that you enhance that credit. I also concentrate on government affairs and business development as well as real estate development. And so those are some of the things that, again, Green and Associates concentrates on. Can we go to the next slide? Green and Associates is a limited liability company, which is a LLC, serving to facilitate the placement of surety bonds and financing qualified providers to small to medium contractors and developers. Next slide. Again, we work with hedge fund, angel investors, hard money lenders, and also banks. One of the things that when we're talking about hard money lenders, I try to steer individuals away from hard money lenders because most times, again, you immediately have to start paying that money back. There's no cost to submit when we're talking about submitting for funding or also for bonding. All of that paperwork is free. All you have to do is fill out the paperwork. I send it in to the underwriter, and then we'll find out specifically with bonding what your capacity is and also what your aggregate. Again, when we're talking about funding projects, and you also have a young lady that you'll be hearing from later, everybody looks at you differently and look at your company differently. So there's many different ways when we're talking about how do you prepare your paperwork? What kind of projects are you bidding on? You know your company better than anyone else. You do. So when you're selling your company, you look at your marketing plan. Make sure you have a great executive summary of your company and make sure you have your financials in order. These are the kind of things that I tell companies that have been existing for a while or starting out new. Have your paperwork in order. Have your T's crossed and your I's dotted. Next slide. When we're talking about, which earlier I mentioned a bid bond, the bid bond assures that the bid is submitted in good faith and that the contractor will enter into the contract with the price bid and provide the required performance and payment bonds. The performance bonds. The performance bond protects the owner from the financial loss should the contractor fail to perform the contract in accordance with the terms and conditions. We talked about a lot of this yesterday. When you're talking about a bid bond, that's initially when you're talking about looking, reviewing, and looking at the RFPs and looking to see if the scope of business that you want to go for, use the bid bond to, of course, bid on those projects. Once you win the project, you're looking at a performance bond, which we just stated right here. And that performance bond is put in place that if you do not fulfill the job, that performance bond will make sure another contractor comes in to make sure that the work is completed. The payment bond assures that the contractor would pay specific subcontractors, laborers, and material suppliers, associates with the project. We mentioned this a little bit yesterday when we're talking about the payment bond. If you are bidding on union projects, a lot of time the contractor will require that you have a payment bond if you are a union subcontractor because they want to make sure that your union dues is being paid. If you don't pay, that payment bond then will kick in and make sure that those union dues are paid. Now, when we're looking at payment bonds and using bonding, that's one of the things that the underwriter looks for too, is make sure that you're not behind on any of your union dues or your union payments because they don't want to pay for something that you should have been paying for before all of this has begun. But also suppliers. Sometimes a subcontractor may get behind in paying its suppliers. That payment bond also guarantees that the suppliers also get compensated and paid. And so that's why it's important, again, that you may have a payment bond that's in place. Next slide. One of the things that I'm proud to say is that I've been surrounded by wonderful people in the areas from finance to also bonding with years and years of experience. And so one of the things that I stress is make sure, I don't care if you go with Green and Associates, anyone else, make sure again that they can give you the service that you want. Make sure they can provide the bonding that requires for you to grow your company. A comprehensive product line, competitive pricing, easy application process, individual assessment process, and make sure that you build a relationship with that individual because it's so important, as I mentioned before, just like you build a relationship with your attorney, you build a relationship with your accountant or CPA, you should build a relationship with the person that's handling your bonding. Next slide. Uh, Next slide is how do you get in contact with Green and Associates? Uh, the phone number is 314-568-3851. Email address is keithgreen3788 at yahoo.com. But before we finish this, I would like to see if there's any questions.
If you have any questions, feel free to raise your virtual hand. We can let you talk with Alan directly, or you can feel free to put them in the Q&A box. Just give it a minute here.
No problem.
Hey, Alan, this is Andre Hargrave. Couple questions for our smaller clients out there. It has been put out in bond land, or what people perceive as, if you ever default on a bond, will you ever get another one? Or is it virtually impossible to get another one?
It's okay. The answer to that question is it's very hard to get a bond once you default on it because, again, it's just like a bank loan. You have to answer the questions: what happened? Why did it happen? Again, was it at fault of your own, or was it something that occurred that you couldn't, was out of your control? All of those things and more. I've had individuals that had defaulted on a bond. Was it very hard to get them bonding? Yes. Was it saying impossible? No. But it is very difficult because, again, a bond company, which is basically insurance company or an individual surety, they want to know that you have good character. They want to know that when you start a project, you can complete a project. So to answer your question, yes, it's difficult, but it can be done.
Okay. All right, that's great. Then another question is, can we use debt to finance a bond? So can I get a loan to then finance the bond?
Yes, many times what occurs, and that's a good question right there, is that an individual may or may not have the money once they win the project because they may have other projects going on and you may have to take out a loan to actually for the bond. I've had some that, again, before they get the first draw, they need to make sure they have the bond in place, but also the money for the payroll. And so they have to get a loan before their first draw to, of course, cover the bond and even cover the payroll. And there's many different ways that that is handled too, from again going to the bank to using factoring and many other ways that again could pay for that bond up front.
Okay. Excellent. I actually have a list of questions here. So one of the other things that I do get a lot from a lot of our small businesses, and we kind of alluded to it yesterday, but they've been subcontractors on prime contracts. And
Mhm.
so now they're coming to us saying, hey, we want to be prime. They've never done bonding. And I am not quite sure where it originated, but there's this whole thing about being umbrellaed up under a prime contractor's bond, right? How does that work? Because I know some agencies, a deal we just worked on not long ago, they said absolutely not. right? So how does that work?
Well, again, it goes back to your track record and your history of work performed. And as you're growing your company, of course, one of the things that we talked about yesterday is work on hand, history of your company, things like that. Because as you are growing your company, you may be in the private sector, and a lot of times in the private sector, they may or may not require that you use a bond. And so you may be existing for years and never need a bond because the general contractor may be carrying the bond. But now, as you stated, you may want to become the general contractor, but you have never used the bond. So you again have to fill out the paperwork. Of course, you have to show your track record, which basically is your resume on jobs completed, making sure that you also talk about and show your suppliers that have been paid and the history of your company. And I'll give you a good example of a gentleman that, well, it was actually two companies and they merged together. They were based out of Texas and Mississippi. And they did a joint venture together because neither one, the project was a $15 million project, but neither one could handle the $15 million by themselves. So they did a joint venture. They turned in the paperwork together. We looked at both tax returns on both sides, and they were able to get a $15 million bond. And it was for a project in Mississippi. You have to be creative sometime. Now, all insurance companies, not saying that they'll go along with it, but you got to look and you have to ask. And so these are the kind of things that your agent, person that you're dealing with, I hope they have the experience because, again, it's all about having the experience and making sure that you go to the individual various companies to see if they'll take a risk on you. It's all about that risk.
Okay. So what you just explained is a perfect example. So we were doing a joint venture. Actually, let me correct that. Mentor protege under the
Mhm.
SBA with a major engineering firm. Um, eh, major, they're about $500 million. And our client, which was a small $3 million 8A firm, right?
Mhm.
Um, and so the joint venture needed bonding. And so the argument was the big prime contractor should cover more of the bonding costs than the small company. But then the SBA explained to us it depends on the deal and if our client who's the prime on that deal. Have you had any experiences with that?
Yes. Yes. You know, a lot of times what occurred, the general contractor may carry the entire bond. But what they do and they like to have is the subs that's also working on the project to also carry a bond because it makes sure that the liability is not as heavy. And so you'll carry the bond as the general contractor, and you'll require that your subs also carry a bond. But there are those general contractors because they have to carry the bond anyway if they have a relationship with you, done work with you over the years, they may not even acquire, that you have a bond. So it's all about relationships. Now with the SBA may say, again, going back to the project that you had there, and it was a $500 million project, somebody's going to have to carry that liability, which is 9 times out of 10 is, of course, the general contractor. They want to make sure that the liability, again, is covered in many different ways. So they may require that the sub, also many of the subs, carry bonding when they come to the table and also win part of that contract.
Okay, so I'm probably going to introduce you to this smaller client of ours,
Okay.
and she was an architectural firm, and
Mm-hmm.
we partnered with this engineering firm. She did get her I want to say she got her GC license, but as an architectural firm, she really never did any GC work, right? But I'll pass it to her and we'll see what we can do for her.
Very good. You know, very, very few architectural firms even require a bond because basically that's professional services. And a
Correct.
lot of times they don't have to carry the bond. You know, the general contractor carries the bonds and the sub, but she's stepping into another realm, becoming the general contractor.
Correct. Correct. So, yep, I'll make that introduction. And then I think I'm trying to see if there's any other questions. But with that said, I'll turn it back over to Sarah.
Thank you, Andre. Thank you, Alan. I would now like to introduce Sandra Lopez. She is here with our partners from B-Side, and she is just going to take a minute to give an overview about how they can assist our attendees with financing. Thanks for being on, Sandra.
Thank you so much, Sarah, and thank you everybody for being here today. Okay, let me share my screen really quick here. Let's see. Okay, I hope you all can see my screen now.
Yep, looks great.
Okay, perfect, thank you. So as Sarah mentioned, I am with a nonprofit lender called B-Side Fund. We help small businesses getting access to capital. And we have been working with small businesses for over 30 years. Our mission is impactful and is to foster the economic growth of the diverse small businesses. And with that, with different programming currently here at B-Side, we also help small businesses getting access to SBA loans. We help deploy those funds through 504 loan programs as well to 7(a) loan programs. And outside of the SBA, we also have a direct lending program that helps small businesses to get that finance they are looking for. And over the years, our organization have been financed more than 300 loans during our direct lending program. With more than 23 million financing, and we have been helping create more than 1,500 jobs in our economy, which is something that we feel very proud of. Talking a little bit more about the specific direct lending program, this program can qualify applicants that are looking to finance between 20,000 up to 350,000. The amortization term that we have available is from 3 years up to a maximum of 10 years. And the interest rate will vary. We have programs that can qualify from 6.32% through the maximum of prime plus 4.5. Majority of our programs, I will say, we do try to focus on those underserved communities and businesses that are not able to qualify to traditional banking or have been denied by the banks for many reasons. So we try to help those with that financial system. And also our programs don't have any prepayment penalties. Borrowers are able to pay off the loan before term if they decide to do so. Regarding the use of funds and how our clients can use the funding, it could be either for working capital, equipment, inventory. We do a lot of business acquisitions and debt refinance. And there is some requirements that we want to see from our applicants, including any personal guarantor that owns 20% or more on the business. I would love to have that person on the application as well. We also pick any furniture, fixtures, and equipment as business assets. However, we have some programs where even if it's not sufficient collateral, we are able to offer that unsecured business loans. We also want to see at least 10% equity contribution. That can be either prepaid equity if you already invest on the business or buy any other piece of equipment as part of your project. We can consider that prepaid equity as well. In addition of that, we have some general eligibility. We're looking for businesses that are based on the United States that are on a 51% or more for a USA citizen or a legal permanent resident, and that have been in operation at least for 6 months and are generating revenue. We do have a minimum credit score required, which is 630. However, if we come up with applicants that have a lower credit score, we also have different options available for them to get that finance, even if the credit score doesn't meet a minimum required. And overall, we want to see applicants that have the financial information to demonstrate that repayment, as well to a business plan and income projections. The general benefits of our programs, as I mentioned, we do support those businesses that don't qualify to traditional bank finance or have been demonstrating that need for credit. We have very low down payment options. We usually finance 95% of the project, requiring the applicants only to inject that 10% down. We also help medium to long repayment terms. As I mentioned, short terms will be for from 3 years to a maximum of 10 years. That will help the applicant to have a lower monthly payment and improve that cash flow. And despite the access to sufficient collateral, we are able to finance unsecured loans as well. And overall, we want to help that business to grow, to create that equity and jobs in our community. And we feel very confident on our interest rate and the conditions that we offer to our borrowers. And the application process is very easy. From our end, we will request that you submit an eligibility check through our website at bsifund.org. Once that application is complete, we will get back to you, giving you the option to submit all the financial information through our secure portal. And then from there, our team will review the application, make sure that meet all our requirements, and submit the application for approval. Processing time, it will vary. Sometimes applications go very fast, to 1 week up to 1 month. So it is up to, I always say it's up to you, to have all of your documentation and information complete before you submit the application in our system. And if you would like to learn more about our programs and what we do, please visit our website at bsifund.org. You can learn more about our mission, what we do. We also launched a few months ago our BSI Fund University, where we are hosting free webinars for a small business every Wednesday. And we also have a technical system blog in our website where you can find more information that can support your business in different ways. So feel free to visit that. And here is our contact information. If you have any questions, feel free to email us and we'll be happy to address those. Thank you so much.
Thank you, Sandra. All right. I think with that, thank you again, Sandra, for coming on. Thank you again, Alan, for your presentation today. We will send out Alan's contact information as well as Sandra's after this in case you would like to reach out to either of them. And with that, I think we will give you some time back in your day and close out this webinar. Thank you so much for coming, everyone.